S&P 500 unable to follow through after a rally yesterday. Nasdaq fails to break through a critical level. S&P stocks above the 200-day moving average break their major support. Dollar continues to try and push higher, but is hitting a wall. Bitcoin continues to plummet. We'll explain why this is important to watch. Nvidia is setting up a very specific pattern. We'll explain. Tesla gets rejected at a critical level. Target makes a 3-year low. DIX breaks down on poor earnings. BNTX rallies another 5%. We'll explain why. Financials make a core rejection move right at the close. SOX makes a nasty reversal ahead of Nvidia's earnings. We have a ton to go over. Let's get to it. Hey everybody, welcome back. The S&P 500 is still unable to close over 4,400. We saw that somewhat disappointing to say the least. We would like to see that close happen. Instead, we're getting the shooting star pretty much exactly where you don't want one, and you can see that close. We're going to drill into this, obviously, but we just kind of have to look at what's going on in this level. You have your little doji right here, and you can just see there that you are unable to get above that level. So this is a control level, and we're going to just drop that in right. I'm going to give you an exact number. So you're looking at that 44.11. We've been talking about 44.10, that whole area for some time, and you just see that right there, and you might want to just remember that that has become a pretty critical level for whatever reason. So it is what it is, but it's definitely a level that we're going to want to watch. Now, if we know that that's one area that we have to watch, and we're acting this way, before we even get into the moving averages and drill down into this in an hourly, there's a couple things to address. Number one, this bar broke down. You have 3 rising bars and you're unable to close above the open of this bar. This is technically not what is called a rising 3, but it is darn close to it. And they are pretty vicious patterns, where you have a control bar where you break down. In other words, you can see the breakdown right here from the neckline. Then you rally up 3 to the top of the open, and then you undercut that bar right there. And then you almost, I won't say almost always, I'll say there's a high degree of probability that you retest the lows. When you do this, what it means is that you don't have enough demand to work off the control bar. The people at the open still want to sell, and this has a pretty high degree probability of rolling. If you have ever looked up candlestick patterns, this one is probably one of the highest degree probabilities, but it's not complete because this has to be a green bar, then the next bar has to be red and solid on the way down. The components are there, but it's not perfect. But if we drill into this now, and just before we even go in a little further, I mean, you should be able to see this DTL, you should be able to see the neckline or inability to get above the neckline. Drop in the moving averages, get rid of my writings. You have a 12.22 cross, which is right here, which you all can see. You now have a 12.55 cross, and you are setting up for what? A 55.22 cross. The easiest way to determine when that cross is going to happen is you put up the 22 and the 55 here, and you drop a line, and you can see that you're between 44.71 and 45.05. If you just move the line over, you'll see how you drop. And you're moving at roughly about $7 a day. So right now you are at about 70 apart. So if all things being equal, you're about, if you moved equally, you're somewhere around 10 days out from having a cross here. That's not really where you want to be. And you are seeing a lot of weight on this market. We did bounce off the oversold condition. If you remember, we talked greatly about this on Saturday's video. And for those that are new, you'll note that all these videos are linked together starting from Saturday on. And this is going to follow through from some of the things we went over on Monday. But you can see right here, Friday, we went over how we were grossly oversold and we were due to bounce. What was the most troubling for us when looking at this is by Monday, we were already back up here. And then by Tuesday, at 6 o'clock, 7 o'clock in the morning, we were already overbought again. So this was pretty staggering stuff to me. You can see your level right here. But what got me was this. So you can see your level right here, and that was the high, and this is the low. So between this low and this high, and this is important, you want to have a pretty big move that is something of substance. That tells you where you are. So one of the things that will tell you also where you are is when you see from soup to nuts and you only move 2% to go from grossly oversold. Now, when I say grossly oversold, you're at a level that you've only seen a couple times in the past couple months, meaning if I go back on the hourly, we go to April and we just drop a line just to get a sense of where we're at. How many times were you here since April? 3, 4? And you can see these moves out of the gate where they got us to before you got overbought. So hopefully you understand what I'm saying here. So for example, this move got us from here all the way up to here, which got us about a 3% move. We didn't get anywhere near that. If you take a look at this level and from this oversold, you can see the positive divergence right there. And if you go all the way up to the overbought, well, that got you 3.5%. Okay. We didn't get anywhere near that. We got about half that move. And that's not what you want to see. You want to see a much stronger move. On top of that, you just kept rejecting at core levels over and over again. If we just drill into this, and it's really important to spend time on the actual index. You could tell that for the past 2 days, 3 days, we've been spending more time on it. It's all one big trade. Remember, we go back to our stool, and there are times when we have the stool, and that is the macro leg. This is the fundamental leg. This is the technical leg. There is the top of the stool. And sometimes you're leaning on one side, sometimes you're leaning on the fundamentals, as we will with Nvidia tomorrow night. And then other times what? You're leaning on the technical side. Right now we're in one big trade. And that trade is the dollar bond Japanese trade with what's going on with their interest rates. We walked through this earlier on Saturday. I'm showing this because nothing really is mattering except what's coming out. Well, that's not prophetic, but it's actually true. So what I'm saying is what we need to see is we need to see what happens. And we don't have a clear line. There's more weight on Nvidia's earnings now than previously. It's basically all of tech is going to be looking at this tomorrow. And if they're not good or they're not absolute blowout, it's going to be an issue. And we're going to address that. But this was our neckline off the head and shoulders that we went through and started talking about, I guess about at the beginning of August, we started talking about this developing. Left shoulder, head, right shoulder for those that are new. Here's your neckline. Retest that neckline, can't break through. We can all see that, right? And then we talked about the trajectory and how these lines started going steeper and steeper and steeper. And what you need to do when you break a DTL, which is a downward trend line like this, what you need to do when you're going to break a DTL or a downward trend line is real simple. You need to get over the higher high. What were you unable to do? Get over the higher high. So now you know that you have to look at 44.10. You know that's a level. Your next level that you're going to want to pay attention to, and you might want to write this down, you're going to want to watch 44.38 tomorrow. If you can't get above 44.38, you have a problem. Now, you're under the 50 again. And you're sitting here at 4,400 and you're barely hanging on. And we have no, in my opinion, we have no leadership whatsoever. So you're going into Jackson Hole, and one of the more troubling things was financials today. And there were some other things out there that really started to bother me a little bit, and we're going to get to that. But if you take a look at the NQ or the Nasdaq, same soup reheated, just different names. So in other words, you start here at 18, and then by the beginning of the day, you're up here at 80. Right? By 6 o'clock in the morning. And you come here and you take a look at this and go, well, how was that move? Well, that was 3%. It's a solid move. But where did it take you? It just took you right into this DTL. It didn't take you anywhere. I mean, it took you literally right into it. And from there, we'll get into this and why there were clear indications to sell. If you watched yesterday's video, you should have done pretty well off the open. But we'll get into it, and we'll get into what we did in the community, and I'll show you some timestamps so that you can follow along. But you can see the DTL here pretty clearly. I actually don't even think that this is a true channel. I could be wrong. Yeah, it does fit in here a little bit. And you just popped out of the channel and then got back. And we even talked about this when we were oversold. You'll remember that one of the things that we were talking about was that you had that inverted head and shoulders, right? And what we're doing is we're not judging what the market's doing. We're not coming out prophesizing whether or not there's going to be this stock market crash. I can't think of anything that is worse than that. Someone telling you there's going to be a crash or there's going to be a rally. If someone does that kind of stuff, run away screaming, because nobody really knows. All you can do is analyze what's happening and then make the best decision based upon probabilities. That's it. As soon as you get that, your life gets a lot easier. Nobody knows exactly what's going to happen. You just don't know. So you see these levels right in here, and you can see that left shoulder, head, right shoulder, breaks the neckline, rallies up, retests the neckline, and boom goes. These retests are clear indications that you're probably going to lift, and that's exactly what happened. Now the question is, what are we waiting for? What do we want to see? Well, I saw this on the 4-hour, and this was really kind of disappointing today, and I actually even waited to the end of the day to see, was it going to correct itself in some way? And it really did not even look at it. And for those that remember before, you always want to look at your trajectories and just see how they are acting. And what we were doing here from the top of this one down, rejection, rejection, and then you tried to lift, and guess what? You just couldn't do all day. So we really need to get over this. We really need to make a higher high. We definitely did not do that. On the 4-hour, we were grossly oversold. We went over this. And I just want to show you this because it's really important for you to understand just how oversold we were. If you drop a line here on the Nasdaq on the oversold, you have an 1850. I mean, you go back to May of 2 years ago. 1, 2, 3. There's 3, 4 times here. And this is all we got out of that. That's not what you got out of these. And this was when you were moving. This is when you were actually declining. This is not great, guys. That's the point I want you to take from this. The way that we responded to the RSI bounce, it's not great. It's not. This is the daily. It is what it is. The oversold down here does mean that we could continue to bounce. And so what I've been telling everybody in the community is you just want to hit singles while this sorts itself out. You're going to get a better read on the market, guys, tomorrow, right after we see what happens with Nvidia. Things will get a little clearer on how they're going to read tech. If Nvidia does not lift, tech has issues. And you're already starting to see cracks of that, and we'll get into it. But if you take a look here, we've gone through this a couple times, and I want to point out for those that are newer what this is. This is S&P stocks above the 200-day moving average. This is on a percentage basis. You don't even really have to do this and candlestick. You can just do it in line. Doesn't really matter. What matters is the number. You always want to be above 50. The minute you get above 50, you have to assume that the S&P is going to underperform. What does that mean? It means that the S&P is probably heading into some kind of drop. And that's what you need to be aware of, that the S&P is heading into some kind of drop. We don't know how deep that drop's going to be, but if you go back and you mark here in March, or you mark when you broke here in May, or you broke when you were down here in December and how you flipped in January, go look at the performance of the S&P when it flipped in April, go look at the S&P performance when it flipped there in June. You'll see exactly that. This is a sign of outperformance. This is a sign of underperformance when you break it. It's that simple. You can go and look at it yourself. The moment you get under this, you just go on the premise the S&P is going to underperform. That means buy defensive. Well, not so fast, and we're going to get to that in a minute. But we should talk about the dollar. I'm not crazy about what I'm saying, but it's not, to me, it's not breaking yet. I want to just review. We went through this the other day, yesterday, and we talked about these levels, and we talk about how this is playing itself out. And you can kind of see how you're going right here. Here's your channel. Try to get above the 200, can't, bam, rejection. And then the question becomes, what does that mean? What do we do with that? I don't have an answer. This is my answer to it, as everybody's fully aware. I look at this type of cross, and let me pull this up right here so we can see this. So what I tend to look for are these death crosses. These death crosses control the move. Until I get a golden cross here, this death cross is in charge. What does that mean? It means that the 200 is resistance. I'm not really blowing through the 200-day moving average here. I'm kind of riding it, and I'm kind of riding this channel that we drew. That's what we're riding. So I have a hard time telling you that, oh, this is clearly we're through. Are we, or are they just poking their head above to lure some people in before they start to, roll you back down, which they seem to have a way of getting us in lately, don't they? So I would watch this. Are you over the 200? Yes. Could you make an argument that you're over the 200, therefore you should be bullish? Someone could make that argument. It won't be from me until you start hitting, at least make a higher high, guys. Make it like a real higher high out of the channel. Maybe then you could make that argument. Till then, I'm not buying that. I want to talk about Bitcoin for a second. And the reason I do is because Bitcoin is how a lot of people trade risk. People say it's a store of value. I would say that people trade it as a risk asset. And I've noticed that you have people that they don't want to play with the earnings. They don't want to play with anything. They just know that when the market is good and the Nasdaq goes up, that people buy Bitcoin. So they buy Bitcoin too. It's self-fulfilling prophecy. The issue that I see here is we were told that everything was going to be okay because this was just Elon. If something doesn't go right, just remember, just always blame Elon. But this was just Elon selling some stock for SpaceX to fund something. Okay. Then you have this bear flag that forms. Then this bear flag breaks 25 today. You have not had any buying in Bitcoin. If you take a look at this, the last big green day that you had was about 2 weeks ago. You have not had anything since. That's pretty telling, guys. It's pretty telling. So you need to hold this 24.8. And if you don't hold that level right here, you're going to have a problem. You can see that this was resistance and then it flipped to what? Support. It needs to be support again. You can see right here how this trend line is affecting us. We don't even have to put the moving averages in. We know that they're a disaster by looking at it. I do want to review where do I think this can get to. I think they just kind of walk you down to these levels. So, I mean, worst case scenario right now, based upon this particular pattern, you're looking at getting back down to that 17. Does it happen? I don't have a clue. But all I can tell you is just by looking at that chart that, yeah, you have a choice, you have a chance there. I would say this is probably a little stronger than I think it is, just coming across, because you've got a couple spots here. So you have like a little bit of algo there. Then, right, then you had some resistance here, flips to what? Support. Right, so maybe we get it. You have a little more support there than I first alluded to. Let's leave it at that. So let's see what happens with it. It's not something I'm getting in front of. I want to follow up on Nvidia and what we talked about. So I want to go through what we talked about on Friday. I want to go through what we talked about on Saturday, and I want to talk about why we're viewing the world that way. So number one, see these two lines right here? These two arrows, rather? Go to a 4-hour. Now, for those that have been following me for some time, I've been trading a while, and then over time, I don't know how to call certain patterns, and I think certain patterns don't have names. I call this devil horns for no other reason than I never really had a reason for it. But really, when you get to the same area twice, and you form a red bar, preferably wicks, but I didn't even have a chance for a wick here, because it was the gap up into resistance. But when you do this, this reminds me of two horns right here, and this kind of reminds me of a devil face. Maybe I have issues, but nonetheless, that's what it looks like to me. It's usually exactly like this too, where you've come down and then you have this V, and then it's a rejection and then a rejection. This is pretty nasty stuff, guys. This is pretty nasty. The only thing that really would get me to not be short this, and one of the only reasons why I did not short this, is because I don't want to come in tomorrow to a flat market and then try to figure out what I'm going to do at 4 o'clock with the short position, because I would not be short or long any new positions going into Nvidia. You are predicted to be, people are saying, oh, we're looking at a 10% move. Right now, according to the futures market, you're over 12%. So that means that you're looking at, at least $50 one way or another. Now, the beauty of this is people doing, some kind of credit spread or debit spread, and then that'd be funny if it just sat flat, but I doubt that's going to be the case. This is really nasty stuff, and you could see this from today. One of the core things that we did yesterday was we talked about this, and we talked about how we went from oversold to overbought already, and we talked about these key levels. So if you go back and listen to yesterday and you look at the positions from yesterday and then follow through on Friday where we actually did go long, that was pretty fortuitous, and we did fairly well with that long position coming off of here. Went long, held, went long more, and then we sold right into this. I'll show you the timestamps in a moment so you can follow along with the line of thinking. But here you are. And then all you did was just very simply open right into resistance, right into that level I just showed you, right up here. You just opened right into it. And that's exactly what we wanted to see. What I actually wanted, and man plans, God laughs, what I wanted was to open at like 490, test 480, and then see if we were going to bounce. In other words, open up here somewhere, I don't care where, retest this, see if it becomes support. If it does become support, then get involved more. Maybe it retests, maybe get involved. We didn't get any of that. We got absolutely none of that. We got the exact opposite of that, really. And so you have to make a plan, but you also have to do what happened. So what happened here? We hit that level and we broke, and you can see this very clearly right here. There's your level right here. Can't miss it. And the moment this happened, I sold. Then after this, what we tended to do was give it some time with the rest of the stock, selling some stock in here, give it some time. And then by this point, that was like enough. I'm like, okay, well, I've held enough of, we trimmed right into this. All the options were gone. I trimmed stock into it, and then I held some. And then once we started breaking levels, this became pretty clear that that was it. Why did we think this was going to happen? I'm going to change my language there. Not why did we think it was going to happen? Why did we think this had the probability that it could happen? Because I really want to get people away from the idea that you're supposed to predict what's going to happen. You're supposed to assess risk and analyze. So I'll try to watch the language and change that just so you understand really how, where my head works. But you can see right here where you were. You can see right here on the RSI. We were grossly oversold. It presented a great opportunity to get involved and buy. You can see here, same thing. And then obviously you get the move. You get the reversal right here. You open overbought. That was it. I knew within 1 to 2 hours of a move like this, and this is what always makes me laugh when people say this is a lagging indicator. I knew when you're up here, you only have an hour or two before you're going to reverse. And you can go back and you can go look at this chart all yourself on every single time that did that and then starts to roll. There's not one time that you're going to find a chart where you did not roll after being up here for a couple hours. At a minimum, you're going to stall. At a minimum, you'll stall. Because this determines the magnitude of the move. You start getting into the 80s and the 90s, you can't go any higher. And then what you do, and this is exactly what we did, we're looking at multiple time frames. Here you are in the 1 minute. Here's your RSI on the 1 minute. You're at a 95. You physically cannot go any higher. This reading, it's very difficult for this to go up the rest of that. I mean, it's almost by magnitudes that it has to go up when it's up that high. And then you just saw the reversal, you broke, and that was it. So these were the notes from today. When I am live, someone will usually John or Emily or someone else that's in the room will come in here, Apex will come in here and they'll start typing what I'm doing. And then we just put out the alerts like this, if it's options or day trade. We were already in this. But at 9:15, everyone's getting all giddy. We just come out. We're already live just saying don't FOMO, but I just want to point this out besides the other stuff in there, Disney, the game plan. So right off the rip, we have a game plan. We want to sell the highest strike first in options. Why? Because that has the what? Lowest delta. If you have the lowest delta, you want to get out first because that's where all the IV is, the implied volatility. You got to go. They're the first ones that always go. Your highest strike always goes. Because you're not going to lose as much if you're at like a delta of 1. We will watch the 1 minute bar, and the moment it ticks down, we are going to lock it in. We know exactly what we were doing at 9:22 when the rest of the world is panicking. All right. And this is a really important thing that you have to understand. We do not chase. We do not want to be exit liquidity, meaning I'm not buying that stock or selling so that you can get out. You're my exit liquidity, right? That's how I look at the world. You have to be set up ahead before this stuff happens. And you have to have a plan, okay? I don't want to be that guy that's FOMOing into there and making sure somebody can get out. All right, and then you can just see 225s. We'll just lock in any weakness. We bought the 225 calls yesterday. You saw that trade for Monday. And then that was pretty much it. If you look at this, 929, by this time it was like 932. I think I can click on these. You can see it. 931, I made it a full minute. And then we were out. And then we were out of the Teslas as well. And then what we do is just started getting out of the stock and saying, look, if you want to play the 500s, you can roll out that far. I didn't want to do it. I was just saying that we're probably going to high first hour and a half, hour, 2 hours. If you wanted to short, this was 935. If you want to short Nvidia, this is where you do it. I didn't do that. There were people in the room that did want to short Nvidia and were asking for a spot for it, so I put it out there. And that's the reason why I put it out there, because if someone wants something in the community, I'll try to, show them where I would do it. But I have a long bias, and that was not how I went to trade. This was me, and I want to point this out. So this is DIX. I was looking for some kind of bounce in DIX today, and the reason I'm pointing this out is I don't want people to think that every time I'm doing something, I'm right. So DIX was something I thought could bounce because it bounced before. It didn't. We never did the trade, but that's where we're at. And then these are just other notes where you can see a link for a private stream. And then you can just see that this clearly states by 9:37, I am 100% out of that trade. Now, it's important for you to get that so you can actually see how you come in the morning. You have an entire plan mapped out before it starts. You already know where all your readings are, all your indicators are. So when that fires, you're not sitting there holding the bag going, what do I do? Oh, well, earnings are going to be good. Are they? I think they're going to be a blowout. But then you're still going on that premise, right? I think they're going to be a blowout. Doesn't mean I'm right. Maybe they couldn't get enough chips because Taiwan Semi already said they were having capacity issues. So then you have to go and take a look at it this way. Now you're expecting good earnings, and then you're expecting the stock to go up because you had good earnings. So there's two things that you need to have happen there. So instead of that, I'll come in tomorrow. From a trading perspective, I have long-term positions in Nvidia, but from a trading perspective, I'll come in tomorrow and I'll reevaluate the world and take a look at it and go from there. And we just have to get through Wednesday before we go into Jackson Hole, and then we'll have a whole meeting on that. But hopefully you're getting this, and I find that instead of me creating separate videos on the trades, working them in this way, I can clip these out later, but this is really important for people to get. So please comment on this, and please comment on me going through that. I think it's worth the time to work those into these videos, but I do appreciate your comments. It does help me create content. I think it's very pertinent for me to show you actual timestamps, besides I have live video of it, when I say that we got out here. I think it's very pertinent for you to actually see how it goes, that it's not just fast, it's thought out and fast. There's a huge difference. So here you are. We knew this 240 was going to be a problem. If you were on the call this morning, the pre-market public call, it is a public call at 8:30, and we do them every day, and we have a lot of fun. And I get a lot of ideas out of them. Somebody walked me through HE last week. It was on my radar, but not really. I was too busy looking at tech, being a tech guru. And they walked me through that and the idea, and I'm like, you know what, they're right. So I don't have all the great ideas, but that's why I always tell people to share these videos. That way I don't have to run ads in the middle of them, which the algorithm likes. And also with the pre-market, show me your ideas, because there's 8,000 trades out there, guys, or 8,000 stocks. I don't have all of them. There's just no way in the world someone's going to know everything. So here you are again, and here's your head and shoulders. We said we're going to rally to the 240. Into that 240, if we can't hold, we are getting out. Guess what we did? We got out of the way, and that was the end of the trade. I would think I was very close to shorting this tonight. The only reason I didn't is because I don't have a good read on the market. What scares me about the market the most is this, because financials know everything. They know everything. While we're trying to figure things out, and let me show you something. This is a 4-hour chart. So this bar is from 9:30 to 1:30. This close right under can only happen today, right? This can only really happen today. Now, why this is a problem for me, even though this is not a true 4-hour bar, why this is a problem for me is it made the lower low close, which let me know I have a confirm that we're going lower. That's kind of how I view things. I just don't want the lower bar like this, and then 4 hours later not get the confirm move. So the confirm move I was looking for yesterday to tell me financials are going to take a hit. See how I didn't make the lower low? See how I made the lower low today? If that means I have to pay up for my short position, so be it. I don't need to be first. I need to be right. And it's already hard enough to be right without waiting, right? So let's get rid of this. So where are we going with this? Well, here's where we're going with this. If financials roll and semiconductors cannot get above 500, which we'll find out tomorrow, someone's got to tell me what's going to lead. Is it going to be energy? Because this does not look like it's going to lead. And I'm watching energy stocks. I'm watching them sell energy stocks on rallies. So the question becomes, what's going to lead? And I don't have an answer to that. The other thing that was somewhat troubling is if you look at XLP, they're dumping everything. They're not dumping one thing. We talked about this a month ago, and I was hoping that it was going to stop. It's not stopping. They're selling defensive. They're selling cyclicals. You're seeing a massive rotation out of equities, period. Like even Hershey's, which is a pretty safe, I get it. They fluctuations with sugar. I got it. But I mean, this is just systematic selling. Whenever you see 45-degree angles, it's systematic selling. But there's no shelter. Like where's the shelter? There's Procter & Gamble, CL, Colgate. Where is it? Maybe it's in UNH. It is not in UNH, he says in his best Morgan Friedman voice. So the question is, there is nothing here that is safe, right? So if there's nothing that's safe and they're getting out of equities, well, they must be buying bonds. They are not buying bonds, that's for sure, right? Because there's the 10-year. How about high yield? Are they buying high yield? They are not buying high yield. They're not buying high yield. They're not buying treasuries. The dollar does look like it might go higher. And they are selling all equities, not just these equities. And what got me today was I saw a sign of hope with like Apple, which I currently still have a short position in, and I'm doing okay. I'm not doing great with it. I've got like Wick City here, and here's your control bar, and you're starting to try to get over that control bar, aren't you? But you're not really there yet, are you? So I'm looking at this and going, okay, well, maybe they're going to start rolling back into Apple and Microsoft. Well, they are not rolling back into Microsoft. Maybe they're going to roll back into Apple, and then it looked like they were going to start buying Google. That didn't work either. And now I've got this island. You should be able to see this here. But you have an island here. But you do have this really cool pattern right here. So I would not rule this out. I'm just going to draw this really fast because we have a ton to go over still. And I want to do it in a short period of time for the weekday. You see that pattern right there, right? So you have that channel there. Google looks great. Out of all the names out there, the fact that Netflix is trying to rally to this neckline, I'm just waiting for it to roll and crack again. Quite frankly, as soon as it does something like that, I would be all over this, looking for a possible short. I did another short, didn't really work here that well, but that's really what we're seeing out there. I want to talk about Target. Okay, I am just FYI, I am short Target. I've been short Target. I added puts today to Target. This call was abysmal. This was an awful, awful call. And I was shocked that it went up. And you can see the undercut here. And then what they do is they lift you up to let you know that everything's going to be just fine. And then 3 to 5 days later, it rolls over. That's a concern. That's definitely a concern. We should talk about this because you're also seeing some of these retailers really start to break down like Dick's. Okay, they missed across the board. And if you're not spending money at Dick's, that's a problem. And it means, like, where are you spending money? Because usually Dick's is where you bring your kids, they go and buy their sporting goods supplies, things like that. So is the consumer drying up? I mean, Macy's would say yes. Macy's would say, yeah, there's a problem. Everybody goes to Macy's. So, you're seeing these issues. The only one that did well was Lowe's. And when Lowe's does well, you don't want to be in the home builders. Because when Lowe's does well, that's because they're fixing up their home. I do want to also walk through this with BNTX. We're starting to see the comments. They're going to wind up, we're going to have mask mandates, things like that again, and COVID's coming back in the variant. I'm not going down that rabbit hole. I'm going to make this real clear. Could you see more people get boosters than before they were previously going to by these comments? Yes. But you need to take a look at this for what it is, and we have to look at this. Okay, you missed earnings and revenues substantially. Okay, you missed to the downside in revenue by 73%. So to go out there and say, I need to buy this because now revenues are going to go up because they're going to start doing boosters. I mean, look at this miss. That is a enormous miss, and you gap down because everybody's short. This is short covering. This will end. If I was to look at this, I would want to be on the other side of that trade, and I would want to be looking for puts. I wouldn't fight the tape, but I would wait for this to settle down and then go from there. That's it.